right. Good morning, everybody. Sejam bem-vindo a todos. Welcome to our 20th anniversary of this event held by the BCCC. I don't think I was here at the first one, but I do remember going back well over 15 years, back to McCarthy, and we've progressed and we've come a long way. And dare I even say that I think this is probably the best agenda we've yet put together. So I'm very happy that everyone is here to join in with us. I mean, these events are nothing without great speakers, great panelists, and great conversations. So hopefully you get that out of the event today. And I know you're in for a treat with some of the people we're going to listen to today. So thanks, Peter.
Our rule is we're allowed to talk for 15 seconds each, okay? So we want to speed it up and make sure that you get relevant information. However, I am the long-winded one, so you're about to hear something from me. Two things that I want to share with you. During this time of the fact that we've sort of moved away from ESG and concerns about the environment to making money, and now we're all going to start making a lot of money, I still don't want us to lose sight of what is actually out there and what we need to be concerned with. So there are two things that I like to do that have already become unfashionable, and I'm going to do it anyway. We have a land acknowledgement, and I want you to know that on this land that we are part of the treaty lands and territory of the Mississaugas of the Credit, the territory of the Anishinaabeg, Huron-Wendat, Haudenosaunee, and Ojibwe-Chippewa peoples, home to the Métis, and most recently, the territories of the Mississauga of the Credit First Nation. We are grateful to have the opportunity to live and work on this land. We are part of the history of this land. You are part of the history of this land. Anything we can do to make this a better place, a place where we can use natural resources to the best possible effect, is exactly what we should be doing. We are also, at the BCCC, Jamili Cruz really was instrumental in developing a DEI statement. And in this, we always say, together we stand as leaders, embracing diversity, equity, and inclusion. We recognize that DEI is not just the right thing to do, but essential for our organization's success. We lead the change, understanding that diversity and inclusion practices must permeate all aspects of our business. By weaving DEI into the fabric of our organization, we cultivate an environment where every individual thrives and feels a sense of belonging, innovation flourishes, and collective potential is realized. Let us forge ahead, united in our mission to create a diverse and inclusive future that transcends boundaries and elevates us all. I also want to thank our sponsors. And without them, nothing happens, to be perfectly honest. And so we have, as a diamond sponsor, we have Mako De Filippo of Aero Copper. Mako, stick your hand up, would you please? This guy is a superstar, all right? And now that you've seen his face, go right on over and beg some money from him. So we also have Valley and Valley-based metals, and with Gustavo Pimento, I don't think Gustavo's here yet, is he? No, he's not here yet, but he will be here. And he will be giving a keynote, which is wonderful. We have Rio Tinto, Jamili Cruz, country manager, and Jamili is the conscience of the BCCC. So I want you to know that even though she's all business with ethics. And so I'm just very delighted that she's here. For platinum sponsors, we have TMX, who have this beautiful venue. We have Guillaume Lagaret. So thank you so much. And Rob Peterman, I know, is here as well. You folks are instrumental in helping us succeed. So thank you very much. We're very grateful. We have Alvarez Marcel with Rafael Markey. Where's that Rafael? I saw him earlier. There he is. Yes, perfect. So we have him here as a member and a sponsor. Very grateful. Miller Thompson with Jeff Clark, and who's, I think the partners of Alex and Andrew and Jeffrey might be here. There we go, over there, yes. So very grateful, and they'll be hosting our event tomorrow, so thank you for that. And then for gold sponsors, we have Aura, which is Rodrigo Barboso. We have Anglo American with Ana Cunha, so very grateful to have her here. Brazil Nickel with Mark Tevers. G Mining Ventures with LP Guignac. Itafos with Stephen Keith. Mellowhawk, which is me, Sarabi Gold with Mike Hodgson, Wheaton Precious Metals with Randy Smallwood, and then for our silver sponsors, BML Law with Marcio Pereira, who is one of our chairs of our, there we go, over there, of our mining committee. We have Brookfield, who's a longtime partner. We have Steve Steinway Group with Felipe. They're just a wonderful group if you're looking for customs brokers. Felipe, there he is, over here. And then we have NVR with Chrisia Tuzaki. And we have Meridian Mining with Elena Marcial and Victor Bello. Wendell Holenda from Scotiabank Wealth Management is here. He's a great sponsor. And then DIMBY, we're very grateful for DIMBY's participation with the Brazil Mining Association, too, with Marcos Roberto Augusta and Isabella. The Consul General of Brazil, we could not do our events without them. And we have Leonardo Engi over there, too, who's just been fantastic. Stefania is there. I think I saw Ali here, too. We also have Sergio, who is the third secretary, too, for Itamaraty for Mining. Say hello to him. He wants to bond with everybody. He's also looking for stuff to take back to Brazil, so give him ideas. At KPMG, Daniel Hasica, thank you so much, and Andre Hosco. Andre Hosco is from our Saskatchewan branch, who is the biggest leader of bringing in members. We love you, wherever you are there. Andre over here. From Sescom Barrio, we have Paulo Azevedo, who has been a longtime partner of the Chamber. We have Rami and Cam from Progestis, who has been a wonderful partner and a big supporter. We have Language Advantage, Canada Start Hub, Proactiva Results with Rafael, and Rafael will be also leading the events tomorrow. And we also want to acknowledge Maximiliano Cunha Henriquez Arenzo, Sergio Calaveri, Anderson Barreto Arruda, Giovanna Barreto, and João Marcos Pires Camargo from Itamaraty and the Ministry of Mines and Energy. And finally, I want to bring up Guillaume from TSX to say a few words, and very grateful. And then we'll hear from Marcio Pereira. Please. Thank you.
Oh, thank you very much, Peter. That was a very dynamic sponsor presentation. I could not have done better. Yeah, well, I can imagine. Are you going to sing today or no? Not today, huh? Okay. So, bem-vindos, bom dia a todos. I'm Guillaume Legaré, head of TSX and TSX Venture for Latin America, based in Sao Paulo, as you probably all know. I hope you enjoy Toronto. Apparently, Toronto is warm these days. So, do you all agree that Toronto is warm? Not sure. I also find Toronto a bit cold from the Brazilian perspective. Just to say a few welcome remarks from the TMX perspective, we decided in 2019 to have a full-time presence in Latin America. So I relocated. I was in Sao Paulo in 2019 and heading the activities for TMX in the region. And it's really important for us to show this commitment. As you know, we have a number of issuers, 33 issuers with 89 properties listed on TSX, TSXV from Brazil. We want to grow that number. Brazil seems to be a bit behind some other of the LATAM countries, and we want to support the growth of the mining sector in Brazil. But we are the #1 mining exchange. LATAM is the most important mining market for us outside of Canada. You know, there's 5,000 mining properties listed on TSX, TSXV, and over 1,000 are in LATAM, and 89 are in Brazil. So you can imagine that there's much more we can do to grow the mining sector in Brazil. And this kind of event with BCCC, and thank you, BCCC, Khalil, and everyone, the whole team for the organization. It's great to be a partner of this event and to start PDAC with such a great crowd, a great team, great panels. So we look forward to it. But this week also we have many different events that will be quite interesting for everyone. We have, unfortunately, not everyone can attend, but it's really targeted to the financial sector tomorrow. We have a roundtable, the BCCC Canada-Brazil Financing Roundtable tomorrow morning, because we want to have a closer dialogue between the ecosystem, the financing ecosystem of Canada and Brazil, better connect our capital markets. And we have, for the first time with Apex, we are planning a matchmaking session. So we have selected 5 projects from Brazil. We have 18 projects from Argentina and Chile and Brazil. And we have decided to do the matchmaking during PDAC. So on Wednesday morning, we'll be hosting a special session also to connect those projects with investors, with CPCs and deal makers. So all of this makes our PDAC more productive, and hopefully it will be productive for all of you. But thanks for being here today. And I guess we can start with the agenda. Thank you.
And of course, I talked so long and I forgot things. So one thing I want to share too is we have Apex here with Igor, and they're a wonderful organization that have been supporting us and is supporting Brazilian exports. And so I want to make sure that you know where that is. And Igor is way over there in the corner. He's not in the distance for a reason. He's actually should be right up front, but I want you to know that he's a great guy to talk to. And in addition to that, too, I want to make sure that the people from AMC with Federico and Marcia, they are recognized, too, where we just signed the MOU. Now we have Marcio is going to come up and speak. He's from BMA Law, and he is the chair of our mining committee. Please, Marcio.
Good morning, everyone. A few words before to start. I would like to thank the Critical Minerals Association for this important partnership. It's important to highlight this moment. Cooperation is essential to build trust for business across borders. You are living in a world in transition, technological, energy, and economic. And this transition is not possible without mining. There is no energy transition without critical minerals. But today, mining must also meet investor expectations. In this context, sustainability is no longer optional. It's a key factor in investment decisions. Investors look for projects with strong environmental standards, social responsibility, transparency, and good governance. Responsible mining reduces risk and creates long-term value. This is why cooperation between Brazil and Canada is so important. We share experience, technical knowledge, and a common understanding that sustainable mining is essential for a competitive future in a world in transition. At BMA and within the BCCC, you believe the legal certainty, sustainability, and the open dialogue are fundamental to attract responsible investments. So thank you very much. Thank you, Khalil, the team in BCCC. Thank you, my colleagues in BCC for this opportunity, and I wish everyone a great event. Thank you.
Up here. Folks, please welcome Matt Blondell.
If you didn't get that, I'm Matt.
Is this for the front, for the back?
Yeah.
Yeah, with the notes.
Great.
Okay.
Thanks. I might just set this open. Excellent. Thank you. Hi, everyone. Thank you so much for the invitation to speak today. It's a real honor to be here with you on the 20th anniversary of the relationship. Today, I'm giving you a commodities outlook, and given the current impacts of what's happening in Iran at the moment, my geopolitical outlook is kind of maybe redundant by tomorrow morning, so I'll let you know. So what we're seeing here is that metals and mining no longer operate under a traditional supply and demand model. I've got a number of different terms that pop up in the media, that pop up in government reports, that pop up in industry reports. They're not categorized because they're all interrelated. They're all underpinned by new policy and finance mechanisms. And now you've got competition, industrial strategy, supply chain sovereignty, all driving unprecedented volatility. Governments are deploying industrial strategies at rapid scale. They're searching for competitiveness, but then you've also got other governments with the resources looking at resource nationalism and what we call the obsolescing bargain. Tariffs and export controls are fragmenting markets, and we're seeing multiple price benchmarks instead of a single global reference in some cases. This global shift towards regionalization and friendshoring is seeing new trade blocs as well. This is reshaping where materials come from. Then we've got drivers like the energy transition and decarbonisation. I know that a lot of people in here are involved in those metals. This is a real structural shift for a very cyclical market. And it's redefining where minerals drive competition, but it's also driving where they go and where they come from. You've also got new market dynamics like the CBAM in Europe, which is also pushing for new ESG standards, new emission standards. And when you compound that with other key items like Peter was mentioning around ESG pressures, social licensing and permitting delays, some of these project development imperatives start to shift as the demand accelerates. And then lastly, we've got the technology disruption factor. AI, robotics, processing bottlenecks, they're all influencing the speed of supply, and nothing is stagnant at the moment. Then you've got government stockpiling, defence spending increasing, and as a result, we're starting to see that metals markets are now geopolitical, strategic, and structurally more volatile. They're not just cyclical. So now miners are entering a period where geopolitics and not so much geology are setting the tempo. Oh, sorry. Let me go back. Could we just go back one? No? Too trigger happy, sorry about that. The notes haven't seemed to have caught up. Basically, this slide here shows that our GDP outlooks for 2026 are holding sort of, globally, are holding to the same sort of pattern as 2025. While there's significant, thank you. While there's extreme volatility, there's been some volatility across oil markets, metals, equities, and foreign exchanges. Some of the underlying fundamentals remain stable. Global growth is holding up with upgrades for major economies like the US, India, parts of Europe. Though inflation is expected to ease in most major economies as underlying pressures and cool. And I wrote these notes a few days ago, and oil prices soften later in the year. So we'll find out tomorrow whether that's still the case. So obviously short-term risks still persist. January's Purchasing Managers Index data signaled that there's been a pickup in global growth momentum. You can actually see a bit of a spike in US manufacturing. But output expectations still remain quite lackluster. Manufacturing activity and new orders strengthened in January, but services activity improved at a slower pace. Regarding the US dollar, it's projected to weaken gradually over the next several years, and markets expect the Fed to remain on hold until mid-2026, followed by gradual easing. Investments in AI and digital infrastructure provide unusual cyclical support. I might just skip through this a little bit faster. I see time's running out very quickly. But resilient, what we're seeing all in all is that resilient global economy with some choppy markets at play, but we're operating in a much riskier geopolitical environment than in prior cycles. And the apparent resilience of 2026 may be fragile, and it could be dependent on some pretty benign scenarios which may not come to fruition. Next, the graph on the left is one that I like to play around a little bit, depending on the scale. Basically, it's since January last year, how much the US dollar and treasury yields have dropped. So this reflects expectations of slower growth, potential rate cuts, and safe haven flows. You can see that every time they've come close and then separated, the two lines, the separations are usually around tariff announcements. So whenever we're seeing tariffs and export controls, we're starting to see a divergence where people look for safe havens. And that's why the gold price has become so strong. Geopolitical tensions, rate cut expectations, and safe haven demand have really been driving a surge, which reversed abruptly at the start of the year, as sharp liquidation in February saw investors deleverage across risk assets. Gold remains elevated by historical standards, with prices reacting to monetary policy expectations and central bank buying. Brazil is actually one of the biggest central bank buyers in recent months, and silver has also outperformed gold at times. Precious metals continue to behave as macro shock absorbers against inflation data, global risk sentiment, and currency movements. So the key takeaway here is that a weaker dollar, lower yields, and ongoing geopolitical risk are creating a persistent backdrop of support for gold and silver and other precious metals. Those sharp swings can quickly show how sentiment can flip when markets deleverage. Cool. You all want to know the gold price forecast. This was done earlier in the month. We were expecting. I'm saying we were expecting because as of tomorrow, we may see a very different scenario. I don't know. I was trying to look at Iranian gold prices today, but I don't think the markets are working. We're expecting the gold cycle to peak near. This is helped by policy easing and slower US momentum and broad currency pressures. The strong macro tailwinds are boosting physical demand, with global gold ETF surging and AUM doubling to $559 billion. We do have a base forecast of $4,247 per ounce. This has remained intact through this month. However, a bull run extension scenario pushes it closer to $5,927 per ounce throughout 2027, which is actually a tripling of the 2023 price. Moving on to some specific commodities, so iron ore. A couple of really key moments here. We reconfigured our IODEX benchmark on January 2 this year, shifting it from a 62% benchmark to 61% iron content. The benchmark moved because of declining Australian grades and rising impurities. The materials between 60 to 63.5% are now pricing closer to 61%. And so this has led to an lower absolute price base, limited premium upside, and risk of reduced liquidity. The outlook for this year is that we expect prices to peak in Q2 before easing in the second half as restocking fades. One of the big market impacts this year will be the Simandou project in Guinea coming online, which will introduce a major wave of high-grade, low-cost supply, which is creating a strong deflationary force in the market, especially for higher-cost suppliers like China, Canada, and South Africa, who are facing margin pressures. And so the full ramp-up of this project within 4 years materially lifts the seaborne supply. Medium-grade ore expected to fall, which is expected to fall to the low 80s by 2030, before a modest rebound as high-cost Chinese supply exits the market. Brazil obviously remains one of the world's most important high-grade iron ore suppliers, and in a decarbonising steel world, especially with the introduction of the CBAM in full force, these higher-grade ore ores reduce emissions at a time when ESG credible supply chains matter and buyers are increasingly discriminating on carbon intensity. Moving on to a landmark, not a landmark, a really important report that we put out this year in January called Copper in the Age of AI. I don't know if you've come across it, but a few people in the room work in companies that were engaged in this process, especially traders, miners, and a hyperscaler. Basically, this slide shows copper demand through to 2040. So essentially, global electricity consumption will increase by almost 50% by 2040. This is faster than any other form of energy. Global copper demand is also expected to rise by 50% to 2040, growing from 28 million metric tons to 42 million, and this is driven primarily by 4 vectors. You've got the core economic vector, which is Dr. Copper, energy transition and addition, AI data centers, and defense, and we've also got a speculative one called humanoid robots. This hasn't been properly quantified. It's more of an illustrative marker on the graph here to show that where the market could go in coming years as companies and people like Elon Musk talk about bringing humanoid robots to the global market in the coming years. So core economic demand and energy transition and addition are the largest drivers of copper consumption through 2040, with China and Asia Pacific leading the demand growth. In all, Asia will account for about 60% of incremental demand, while North America and Europe see smaller but meaningful surges that are tied to digitalization and clean energy. You can see that AI and data centers are a new demand vector, which I'll go into in just a moment. But overall, this slide basically shows that this growth in demand signals a shift from cyclical metals and Dr. Copper to a more structural shift with geopolitical importance underpinning access and competitiveness to new markets. Sorry, just trying to shift gears. Cool. So this is the graph that shows the Gen AI-driven growth in AI and data centers. Obviously, this emerges as a new structural driver of copper demand. AI infrastructure is expected to add about 2 million metric tons of copper through to 2040, and data centers are rapidly rising, and with that comes a lot more energy consumption for power delivery, cooling, substations, and grid connections. And then you've got non-crypto data centers, which are basically most of the data centers that are listed there, which require about 30 to 40 tons of copper per megawatt. This makes them one of the most copper-intensive forms of digital infrastructure. This also has implications for other metals markets. Per megawatt of IT power, you can use up to 59 tons of steel, around 30 tons of aluminum, and then hundreds of kilos of rare earths and other critical minerals. So this demand is really starting to shape up as something that we need to be considering for the future, especially as there's been more than 100 new AI data center projects launched in the last year, which really underscores how quickly this sector is scaling. And I'd also like to mention that, there are expectations of $600 billion to $750 billion worth of investment in this sector over the coming years. And so even that robotics new wave that may come up related to manufacturing and humanoid robots, this is, the future is looking very copper intensive. Hopefully this works. Cool. So without, so here basically we're showing that even though we've got these massive projections of how much copper is going to be needed into the future, we're facing a 10 million ton supply gap. Without any major new mining and expansions, primary mine supply peaks around 2030 and then declines. And this is really falling short of what's needed. It's about 25%. New copper mines take some of the issues behind these structural constraints, that new copper mines take about 17 years on average from discovery to production. And this is slowing response to rising demand. Lower grades and tougher mining conditions increase costs and complicate expansion of existing operations. Then you've got the third aspect, which is more of an above-ground consideration, where copper refining and smelting capacity is geographically concentrated, notably around China at about 45%, making the supply chain vulnerable to disruptions and policy shifts. So the implication here is that there's a significant structural gap, which is likely to continue unless there's a coordinated push across investment, across faster permitting, technological information, and expanded mining. So in response, we're starting to see some new market developments. I note that Vale is expanding their Carajás mine, spending $3.5 billion over the next 5 years. You've also got other companies like Amazon and Rio Tinto forming partnerships around building supply. And we may start seeing this as a new dynamic where tech companies and hyperscalers are entering offtake and financing agreements, similar to how we saw lithium and OEMs in recent years. Cool. Shifting gears from copper to battery metals, specifically nickel and, that's good. To nickel and lithium. Basically, our outlook for global plug-in sales are on a steep growth, electric vehicle sales are on a steep growth trajectory. This could rise towards about 50 million units by 2040, with China leading, and Europe, the US, and APAC also expanding rapidly. Battery energy storage systems, here on the right, are also set for an 84x increase by 2040. This is primarily led by China, Europe, and the US, but you've also got other factors and countries in the Asia-Pacific region outside of China, which are looking for increased air conditioning and other electrification needs. The combined surge in EVs and grid-scale storage, this is really ensuring that there's sort of persistent long-term demand for battery metals, especially lithium, nickel, cobalt, graphite, and copper. And essentially, these energy transition technologies, like I've been saying, are no longer cyclical, they're really structural, and they lock in multi-decade demand for critical minerals. And so when we go to lithium and nickel, so I'll start with lithium here. We've got exploration budgets for nickel, lithium, and cobalt, which fell to 4-year lows in 2025 amidst oversupply and weak prices. Lithium's down about 50% in terms of exploration, while nickel and cobalt declined for the second straight year. Producers are facing margin pressure in 2026, with prices low enough to challenge high-cost operations. Spending is really shifting towards development stage assets. And now we're also seeing the US lithium outlook looking strong. Production could rise from 1% global share in 2024 to about 9% by 2035. And, the US has also been lifting its lithium exploration spending, only behind Canada and Australia. I might also note that Canada topped this exploration spending for all 3 commodities in 2025. Sorry. And then I note that time's running out, so I'm just going to quickly talk about lithium, where we saw a spike in 2022 as there were fears of not enough supply to feed new EV demand. This is at the same time when Mexico nationalized all of its state-owned. They made their lithium state-owned as a result of this price spike, and then it soon dropped quite sharply. So there was some real concerns around resource nationalism. The price has sort of settled a little bit, but we saw the price rally at the end of last year, up by about 57% in China specifically, where there was new sort of supply discussions around stronger energy storage demand. In 2026, the demand is forecast to grow at about 13.5% year on year to 1.48 million metric tons of lithium carbonate equivalent, and this is outpacing supply growth. At the moment, the market is expected to stay in surplus until we start seeing a decline in about 2035. A quick note on batteries. China has really pulled ahead in battery production, It's driven by its ability to produce much lower lithium iron phosphate cells compared to the United States, and the cost gap is quite significant. So our projections here basically show that LFP batteries will make up about 60% of China's battery cathode demand, as it is today. However, it looks like a doubling in their capacity. By contrast, the US battery mix grows more gradually, with LFP reaching 13% of total demand by 2035, as nickel-rich chemistries remain dominant. Europe is showing a similar trend. However, China's scale, its cost structure, and rapid LFP deployment really strengthens its position as the global anchor for the battery manufacturing market. Sorry, do I have another couple of minutes? I've just got a few slides. Just noticed we're running out of time. Yeah, we're all good. Okay, hopefully I'm not boring everyone. Let me just go back one. Yeah, back to nickel. So nickel's an interesting one. There's been persistent oversupply, which has deepened the downturn. Nickel exploration continued its structural decline as oversupply and weak prices persisted. Budgets fell 37% last year, which has pushed it from the 4th to the 7th most explored commodity, and making up only 2.7% of the global exploration budget, which is its lowest since we began looking at it in 1997. The downturn has really been driven by persistent oversupply. This has really been led by Indonesia's rapid growth and low-cost production. Something that's quite symptomatic of this is that Indonesia has just as a way to reduce excess supply, has reduced their Weda Bay production quota by 71% year on year, from 42 million metric tons in 2025 to 12 million metric tons in 2026. And further compounding this is some new technological innovations in the processing space, which is quite a trend across multiple critical minerals, as we all know. China's advanced processing. But in the nickel space, they're really looking at China. There's a big push for Chinese-backed high-pressure acid leaching projects and nickel pig iron to matte conversion processing facilities that have reshaped the global cost curve. So basically, this is turning nickel that's usually destined for nickel pig iron to then be converted into battery metals. And so this is a major disruptor in the market. There's also speculation that the US-led Project Vault initiative could bolster nickel demand. However, there's not enough information around this project just yet. But this is as a way of the US to diversify its supply chains. And this may lead to increase in cooperation by Indonesia and the Philippines, enhancing their production capabilities and stabilizing prices. And so as our outlook, we've got LME prices, which have fallen from $25,600 per metric ton in 2022 to closer to $15,300 in 2025, which is really forcing high-cost producers in Australia and New Caledonia into care and maintenance for some of their projects. And we currently forecast the LME 3-month nickel prices to average around $17,000 per metric ton in 2026, supported by supply and policy uncertainty. But the market continues to remain fragile. And then I just want to touch on rare earths briefly. Rare earths, as we know, Brazil has come out in the last year as having the 2nd largest global reserves. And I think this is particularly important for this conversation today, as some of the efforts at the moment are quite nascent, and there's a real opportunity here for Brazilian and Canadian cooperation. So I'll just quickly go into what rare earths really serve. They're really critical for clean energy, electric vehicles and high-tech applications, especially in the defense space. And this is really based around permanent magnets, which are driving rapid demand. Last year, China put export controls on a number of rare earths, which basically put the US auto manufacturing sector under pressure. And this is a risk moving forward. So mining is not the main bottleneck in this space. It's processing and separation, which is usually chemically driven. And China is dominating 60% of mining and 80 to 90% of refining. Brazil and Canada can really play a strategic role by offering secure, responsible, ESG-compliant processing and an attraction from long-term investment. I think in this space, joint ventures or integrated projects can de-risk supply, especially for EVs, renewables, and defence applications. And both governments support positions as being reliable partners in critical minerals development. So I think that the messaging around rare earths for Brazil and Canada is that supply chain security is really a global priority, but it's also a national security issue. And Brazil and Canadian collaboration signals really stable, transparent, and sustainable rare earth supply. And I think there's a real opportunity to lead in responsible production and processing. I might just quickly skip past the last one and go to my conclusions, just in the matter of time. So today's commodity landscape is really looking fundamentally different. Metals are no longer just cyclical, they've become strategic, and we're moving into a more structural sort of supply and demand dynamic. Industrial policy, supply chain security, and geopolitics, as I mentioned, are now driving investment decisions as much as traditional economics. At the same time, this decade is really defined by real supply constraints. Years of underinvestment, tighter permitting, capital investment, and ESG pressures mean new supply simply can't keep pace with unprecedented and new and rising demand vectors. In this environment, selectivity really matters, and electrification metals such as copper, lithium, nickel, rare earths are really structurally supported, while oversupplied bulk materials lag. The energy transition really reinforces this divide, and it's undeniably bullish for the long-term demand, yet the short-term volatility persists as EV cycles and battery policies shift and influence prices. And as the world seeks secure ESG-aligned supply chains, countries like Brazil and Canada are the real winners here, and they stand out. Tier 1 resource development and political stability really make them increasingly preferred partners in a fragmenting geopolitical landscape. And I guess put simply, the winners in this cycle are those that identify their constraints and move early. Those who understand that commodities are now strategic, supply constrained, and shaped by a transition that is both transformative and volatile. And with that, I'll just leave you with the last slide, which is a link to our copper study, which I mentioned before. There's a QR code if you want to scan. And thank you for listening to me, and appreciate the space.
Thank you, Matt. And I know you've started to promote your copy study in Brazil, and that you'll be in 2026 talking about it quite a lot across Latin America. So that's really good. Thank you for your observations. So let's start. Observations. So let's start with our first panel. I would like to call our panelists, Alan Batista, Partner Project Finance at Itaú BBA. Yes, please come on stage. Ricardo Fonseca, Operating Manager, Mining at Prisma Capital. And Rafael Marchi, Managing Partner at Alvarez & Marsal. Morning. Yeah, you can. No, we can. Você vai ter a sua apresentação. Para cima, para frente, para trás, só aperta pouco. So to kick things off, we're going to ask, and actually there was a very interesting study that was prepared by Alvarez & Marsal. It was presented last October in Sao Paulo, Invest Mining. We've seen a lot of interest in Brazil around mining investment. We see that mining finally came to Faria Lima, so the bankers are starting to look at mining, investors even more. So I think it's interesting today just to provide an overview of what are the key findings and how Canada can help, of course, fill some of the gaps and help grow the mining sector or drive the mining sector forward. So I thought it could be good to have Rafael show a few slides, a short introduction, and then we'll start the discussion with the panel. Thanks.
Thanks, Guilherme. So it's a pleasure to be here, and also thanks, Ricardo, for the invitation from the Invest Mining to do this paper. I think it was a very good opportunity for us to talk with Faria Lima, as Guilherme said. I think the idea was really to be a very open type of questions. Why Guilherme in TSX is doing so much of a good job, I'm going to show here. But all the mining companies are coming to Canada or Australia and are not financing and raising capital from the capital that sits in Brazil. So I think that was the study was all about. Let me try to, oh, no, it's not here. Is there? It's not here, it's just in the back. So the idea of the discussion was the asymmetry of capital in the mining space in Brazil and why we're not attracting our money, but foreign money to the sector in Brazil. And firstly, I think there's an overview of the sector. It was already said, we have plenty of opportunities from, we own like 90% of the global production of niobium, the second largest reserve for rare earths, lithium, nickel and copper, iron ore, gold. So everything is in Brazil, right? And as it was mentioned before, we have clean energy, we have democratic play. So why these numbers and these strategic minerals are not attracting the capital market? So a comparison here is very easy, and Guilherme also mentioned before. So the number of companies that are listed in B3 in Brazil compared to Canada is like, it's a shame for us as Brazilians because it's impossible. If I want to invest my money in a mining company, I have a very few options in Brazil. So I'm not going to mention Vale, of course, but maybe CSN and others. But, the juniors are not there. There are very few options. So the idea was, how can we reduce this distance between our stock exchange and Australian and Canadian? So that was the objective. And actually, what we did was, interviews with all of the banks, institutions, capital markets, private equities, and companies like that. And, there was a very interesting phrase that was said, that was, there's no patient capital where there's no predictability. So I think in Brazil, something that's really important, and nowadays I think we're lacking, is legal uncertainty. I think that's a big issue today. So changes in regulation, of course, regulation in mining sector is improving. Everyone knows that. 20 years ago, it was totally different. One could sit on a mineral right and never leave that, even not exploring. Now, this is not possible. So there's a lot of improvements. But mining relies on a lot of regulations, not only regulations for mining. We rely on railroads, ports, energy. So all of those types of regulations are very important to our sector. And if we do not have this, I think this is going to be very complicated. So this was mentioned as one of the main reasons why the financial market do not invest in mining. Other things that are very important. Coming here to Canada, I think that's my 7th time here, we go and we see all the Canadians very proud. You know, mining here is like bravery, it's like heroism. It's like, okay, we are strong, we go to remote places and, you know, we have a lot of challenges and we thrive. And in Brazil, all the news we have is like of problems. The media do not show good cases. They do not show the amount of employees. They do not show the development of technology that is done through mining but comes to our lives day to day. So I think this is a public perception that is very bad, and we have to change it. I think we are on a path, but if we compare to the agro sector in Brazil, like there's a very famous media in agro that's agro is pop, right? Agro is popular. But if we take the amount of forest that is devastated by the agro sector is much more than mining. Mining is way better. So we have to advertise that more. And also, I think the investment culture. So everyone knows if you go to Australia, if you go here, you know, the taxi driver, they invest in mine. Everyone knows the mining companies. They know that are listed. They know the juniors. They follow the progressions of the juniors if they do good discoveries. So, and we do not have this in Brazil. Like, you do not have options to invest, so no one invests. You know, the private do not put his money. So I think this is something that we need. So we need more success stories to show. And with that, we're going to have more liquidity in the country. And you know, these of course impacts in the institutions, right? So we do not have a lot of brokers that cover mining, lack of educational knowledge in terms of you know, where I'm going to invest, you know, and very technical capital market for mining in Brazil. That's something very important that we found that we lack. And then just to move forward here, I think it was just only 5 minutes for me to talk. So we have, you know, 4 steps that we brought, and we're going to discuss that. The full material is like 80 pages. Is going to be in a QR code at the end. So regulatory predictability, the insertion of brownfield miners. So there's a lot of companies that are already operating that are not listed, and maybe this is easier for the capital markets to address. So there's a bunch of companies owned by family business that sometimes need to get money, and it's easier in our point of view than total greenfield, very young companies to raise capital. More financial incentives and tailored instruments. I think this is something that's really developing, and Ricardo's here is one example. In Brazil now we have private equity firms dedicated to mining, streaming companies, more funds to get the money, to raise money for drilling campaigns and exploratory. So I think we are becoming day by day more mature in terms of financing opportunities like SPACs. I was talking to Anna here. Even A&M created a SPAC 5 years ago. So I think this is very important for the sectors. And of course, the role of the government, how the government can support through BNDES, through other initiatives on the development and support of these new companies coming to the market. That's it. That was just.
Great. Thank you very much. So that was a good introduction to show you the existing gap in the Brazilian market and how, obviously, at TMX we fill some of that gap. But when we arrived in Brazil a couple of years ago, 7 years ago, we realized that, of course, we need to be involved in helping companies prepare to access capital, prepare for markets. And now that we see more players engaged, more players involved, and there's a momentum too. The momentum in Toronto right now, I think Brazil looks at Toronto to see how things are evolving. Now the market for mining, I would say the market cap of the mining sector in Toronto is above $1 trillion Canadian, $1.1 trillion right now. We have close to 1,100 issuers. Capital raising in 2025 was for mining about $16 billion, about almost 50% of all the capital raised on TSX venture was mining in 2025. And also venture exchange, the opportunity or the gap is right now with the junior space. The future of the TSX for mining is TSX venture. 55% of our issuers, mining issuers on TSX are graduates from the TSX venture. So this is a clear signal that market cap is on the rise. Number of issuers last year, 40 new TSX venture issuers for mining. It's a clear signal that the market there's a commodity cycle that we need to take advantage of, and the junior mining sector needs to get some additional support. So let's drive the discussion around this and how each player can support the growth of the mining sector. And I would like to start maybe with Alan from Itaú. Good to see you in PDAC, good to see you in Toronto. Maybe you can introduce yourself and explain the angle of Banco Itaú around mining, around project finance as a way to start.
Thank you, Guillermo. It's a pleasure to be here. It's our first PDAC, and we're representing Itaú with my colleagues. So I think it's part of this environment and this momentum that you mentioned and other colleagues before me presented here. So it's a very pleasure for us to be here. Very quickly, I'm Alan Gabriel. I'm responsible for the project finance team on the coverage of the power sector, oil and gas, and also mining. And we launched several initiatives on Itaú to be more close to the mining sector. And we have been operating in the mining sector for let's say for several years, but right now we understand that this is a different moment. In the junior mining that you mentioned, they need a different approach. They need a little more customized approach. And when you're talking about junior mining, several different risks arise compared to more corporate companies that we have in Brazil. It's not precisely a mining financing when we are discussing about the big companies, but when you have the junior, cost overruns, delays, and also volatility become to the table when you have to tackle this for a different approach. So in Itaú, we are dedicating credit teams and also bankers to customize this type of products. And I'm glad to see, for example, we are working very close also with the government and other institutions. And one initiative that I would like to share that I think it's very important, for example, the government, Anderson is representing here, they launched a very innovative instrument that I would say that will be very important for the mining companies in Brazil, for the junior especially. It's the Eco Invest, the third edition that they have. And this is a kind of a grant that the banks will channel for this type of projects. And we understand this could become a very initial process to be more closer to this type of companies, because at the beginning for this program, we deliver this grant, but do not take the risk of credit. But we can structure this in a way that we increase our risk on the credit, even on the greenfield projects, and can take a little bit more risks day by day for this type of projects. So a little bit more longer introduction, but we came back to this point, and for the other, I'll let my colleagues to continue.
Thank you, Alan. Going to Ricardo from the private equity front, but also Ricardo, you were one of the most active members of the Invest Mining, very active in Brazil promoting mining. And please introduce yourself and maybe explain how you see this current vibe or this momentum in Brazil for mining.
Oh, thank you, Guilherme. Thank you, everybody. Thank you, BCCC, for the invitation. It's always a pleasure to be here. And, well, Prisma Capital today, we manage $4.5 billion of capital solution fund. We do invest in several sectors. Mining is one of the sectors. It's one of the main sectors today. We're very excited about mining. I joined the firm to head the mining team. So we do have a dedicated mining team at the firm. And today we see Brazil as a major opportunity, as we always see. So, of course, we have a very, very difficult challenges in Brazil, as Rafael was mentioned here. But we are very excited. We think that the momentum is perfect. I think there is many, if you see in critical mineral side, there is many opportunities on the table. I'm a little afraid that we may lose the train again, but that's a personal opinion of myself. But the opportunities are there. And I think with the right approach and the right capital structure, we can reach those opportunities. So I think it's a unique moment. And we've been working very thoroughly through this opportunity, through this thesis. So it's an exciting moment, I think so.
Thank you. We'll have a chance to talk a bit in more details later on the panel. And Rafael, thanks for the introduction, quite useful. Would you comment from the advisory standpoint how mining companies are currently adapting to the current market conditions? What do you see in the market right now?
Yeah, so
in the Brazilian market?
I think we have to separate in order to be easier to discuss the size and the commodities of the companies. I think the majors, they are in really connects to the previous panel, right? The majors, they are moving maybe back to the basics. We see this movement of going focus on the core commodities and try to be cost effective, faster to get those curves and to get those opportunities. We've seen that, and that's basically, you know, being very cost effective, reviewing portfolios, which includes maybe selling assets that are not, you know, in the core business. So we've seen that a lot, and some M&As happening in terms of mergers in order to get even more scale and more cost effectiveness. Maybe if you go to the mid-tiers, it's a little different because the majors are going to leave behind good assets that are not on that scale, but the mid-tier companies can really address that and make a lot of money and be more specialized on more complex projects, more complex operations, and things like that. So it's a very interesting moment because there's space for everyone, right? I haven't even mentioned the juniors that are, you know, with all those opportunities in terms of financing and raise capital, they can, you know, grow with their own strengths and look for money and try to build new business. So we've seen a lot of movements also on these, right? Lots of new entries, new companies coming online because of all those changes that are happening. So very interesting moment.
Thank you, Rafael. And momentum is key, of course. On the venture exchange, as an example, we just launched 2 weeks ago, last week, the Venture 50. Actually, there's 51 companies, the best performing companies on the TSX Venture Exchange. 48 of the 51 are mining companies. The average return of these companies is 431%. So that's really something to consider. The value creation for companies that are like pre-operational is incredible. And I think Brazil is looking at this, but it's very challenging from the B3's perspective. We work with B3 in Brazil to find ways to help grow this the market and the junior mining market. But from the banker's perspective, I know for producing assets, project finance is easier to adapt to the reality. But also, can you comment, Alan, on the for mature companies and also pre-operational companies, what Itaú can do to support the growth of the mining sector?
Okay, thank you for your question. For Itaú to support this type of projects, for us, we welcome several initiatives to work alongside with my colleagues, for example, as this new wave, I would say, like this new wave of critical minerals that everyone are putting more attention on that. We feel not yet completely comfortable for the technical details on the new projects that are coming. And one of the challenges of the junior mining, financing the junior mining, is typically that the banks always ask, if you have some cost overrun, where does money come from? If you have some delays, where does money come from? So normally we know that the junior miners, they have this dedicated equity for the transaction. In this worst case scenario, it's also a challenge to discuss and to see what we can do on this. So that's why we welcome several initiatives. For example, to mention Ricardo, for us it's very important to work with these several type of capitals, because for a bank it's very difficult to work in a scenario that if the projects they do not succeed to move on, we need to take over the project in terms of exercise, at least theoretically exercise. And when we have different types of capital on the cap table or on this capital structure, we know that we can feel more comfortable that the new money, the additional money, this marginal equity, they could come and the project move on. So this on the junior, that the main concern is the construction per se and the potential cost overrun. So this is one initiative, so to work together with these colleagues. The second is, as we have, BNDES, it's a very important player on this sector, and typically we can have costs below the average of the price of the market. And we know that this could create a buffer for the project, and the internal rate, the marginal internal rate of return of the project is still feasible for this additional money, or for them to come to Canada and raise additional equity for this part. So when we are supporting those projects, we are analyzing all of these risks and this appetite for the equity holder to continue to move on with the project, and also the initiatives on the structuring that may enable the bank to take the project or to sell the project, and to understand the liquidity on the secondary market on that. And just to conclude, based on that, we support the projects through financing directly, or in most of the case through bank guarantees jointly alongside with BNDES on this sense. And right now, that I mentioned quickly, this new initiative, this is a kind of a donation or kind of this grant that the co-invest will enable Itaú to channel this funding for the project, that I'm sure this will help a lot the junior mining, because we can put this money without taking the credit risk. So on top of that, we also take the risks. To manage this will be a very innovative and powerful tool for the financing for the projects in Brazil for the greenfields. Thank you.
Interesting. Thank you, Alan. Ricardo, from your standpoint, private equity, how are you approaching mining today? Financial tools, the type of assets, the stage of development, commodity. How do you see the market and the opportunity right now?
Yes, that's a tough question, and I think the best answer is we do have the ability to deploy capital in whatever structure we want to, and that's very important in Brazil, especially in Brazil. So there is sometimes, like Alan was mentioned here, there is sometimes it's better to do a debt than to do an equity, a convertible debt, maybe in a royalty structure, maybe whatever. We need to open the balance sheet of the company, the opportunity there, and try to fit the financial tools that we have with the ability to deploy that capital in a smart way within the projects. Because if you're analyzing, especially in the junior mining, especially in pre-operational projects, if you're analyzing the risk return, sometimes it's tough, because sometimes it's 0-1 kind of risk that you need to avoid. So sometimes especially in Brazil, it's a licensing risk. And you can't have sure whatever you invest in the license risk if you're getting or not the license. So you must have this ability to structure the project, to structure the capital structure in the right way for each individual project. So that's one thing that's a fund like ourselves it's ready to go. But Guilherme, just going further here, I think mining in Brazil, especially in the critical minerals these days, it's much, much above what was like three or 4 years ago. So the ability that you have to put on the table and the things that you have to think today it's much, much more deeper than was like 4 years ago. 4 or 5 years ago was just a mining company to put mining to production. Today we're talking about geopolitics, we are talking about alignment of interests, we will talk about new technology, because if you think about maybe rare earth here, it's totally new technology that you need to be developed in order to put those projects into production. So the complexity of those projects today are much higher than was before. So I think we're getting this new era here of geopolitical mining, and things are getting much more complicated once you analyze as a business opportunity here for the fund.
Interesting. And
sorry, just to add some point on Ricardo, if I may. This is an important thing that they mentioned, that this level that we've reached, but of course we have too much to evolve. I think even in the banks, we understand right now that you have to have a different type of capital, a more patient capital for the mining. Typically, banks, they would like to have the interest paid regularly, predictable, and of course everyone who don't want to have this, but for mining, there's this understanding that you understand that there's cycles, so you cannot have this standard compared to, for example, responsible also for the power sector. So even right now, it's a little bit confusing, but you have this predictability. On mining, in somehow, you have to understand the cycles, and this is simple for this public, but to discuss this with the credit teams as a whole, this is not something that's very usual. So when you change this ship and understand this, it becomes easier to have a more mature discussion, how to support the projects and what is important for the project and how we're gonna work if this cycle, we are in the end of the cycle, the mid of the cycle, and what is my duration on that, my expectation of the duration, and understand it could change a little bit. So that's why the works with Rafael is very good, because we need to know technically this is feasible, because the cycles, we know that we have to take the right.
But this all I think connects with what I was going to say here. Because nowadays the companies, the majors or the mid-tiers, everyone is looking to the cycles and say, I'm in a gold space, the golds are on a high, as we just saw, but nobody knows what's going to happen 2 years from now. So they're going to, everyone is keeping SG&As low, they try to control costs. So we've seen a lot of opportunities in companies shifting operating models, maybe to get cheaper contractors, to change, to insource activities in order to keep cash costs very low, even if I'm in a good cycle. So I think that's something that has changed from the past. There was like, okay, take the opportunity that the market's good and go rush and push the projects and expand. No one is doing that nowadays. They are looking, the assets have to pay itself, not some headquarters that are going to put the money. This operating model has changed, so every asset has to stand by itself, which is very important to that, right? So you're going to have, even in downturns of this cycle, the company still is going to generate cash, and for the projects is the same. So before approving and before starting the construction of the project, is that asset is going to be on the back end, on the cost curve. So we're going to have a good project, a good production of the project when the prices are low. So I think that this is also something that's happening, right? The CapEx control is vital to the companies, for the majors or for the small ones. Of course, the majors, they have buffer to succeed. Right, so we've seen majors sometimes having overruns and delays, and they can handle that. The juniors and mid-tiers, no. So the buffer is much smaller. So you have to be even more careful before doing a project to see if that project is really going to cost that and deliver the product on that schedule. So I think that's even more important nowadays.
Yeah, and since we have about 10 minutes left, I would like to switch gears and talk about the future and the vision for the future. You represent the future of mining in Brazil. Obviously, we can help, but I think with players like you, it can make a big difference. You've mentioned, Ricardo, the amount of work that has been done so far, that mining is more like a real focus for Brazilian investors and the ecosystem as a whole. But how do you see from the PE's standpoint, from Prisma's vision, how do you see things that can be improved? What is your vision for growth in mining in Brazil?
Yes, we need to evolve. We need to step, actually as an industry, need to step up as a whole. Just take the S&P, my colleague from SAP here, first slide, and you see the complexity about, they're talking about defense, they're talking about stockpile, they're talking about the geopolitical, they're talking about many things that we didn't talk about before. So all those subjects become reality into mining. So that's the things that we're discussing now. We're discussing about robotics. It's like the first report that I read about robotics was from my friend Renato there. I was reading the report and say, hey man, that's a little bit sci-fi here. It's crazy. I'm a mining guy. I'm not talking about robotics. And robotics becomes a reality now, and you see in every projection we see about robotics, and we are studying about robotics and see how many kilos of rare earth has a robot. It's a new era in the mining sector. And in Brazil now, we need to involve these discussions into the industry as now. and of course, have the right players. And I'm very happy to see the banks here, not only Itaú, XP, and the other banks here being involved in the sector. And it's exciting. It's exciting because it's exciting, but the tasks are bigger. I think the test and the complexity to invest now in the sector are bigger. If you're thinking about a project, a rare earth project today, and you don't know how to predict the rare earth price in the short term, it's complicated to invest. Because what's going to be the price? I don't know. If you compare to China, it's probably not going to beat them in terms of cash costs and capex. It's unbeatable. But if you compare to the rest of the world, maybe they're gonna, because of supply chain, your project's gonna be necessary to the rest of the world. So, but as an investor today, how I can proceed with an investment thesis that I don't know the price for the next 5 years? It's completely changed my outcome of the investment profile. But in the reality, that gives me opportunity that it needs to be analyzed. So I think it's exciting. We're ready to do, and let's try. But the discussion needs to be involved and needs to be stepping up because it's really the complexity really changed.
Yeah, and you have the foot on the ground approach in Brazil. This is, I think, something strong from Prisma. How difficult it is to convince international investors, and how do you see this as an advantage for you to be in São Paulo, to be in Brazil?
Yes, that's not only in São Paulo, but in Belo Horizonte as well. We do have an office in Belo. But that's a very good question, because the first one, because I know the answer, and the second one is actually, it's very important to have boots on the ground. It's in every sector, especially mining. So once you're gonna do an investment, I see international funds discussing investing in Brazil, not being there in Brazil, not know the ecosystem in Brazil. How complicated. I imagine myself coming to Canada and try to invest in a mine in Canada. I don't know where to start. So I think the ability to have boots on the ground, technical team, and know the ecosystem there, not only the banks, not only the financial system, but the geological part of it, the engineering, the technical guys who actually to put the projects up and running. So that's very important. So I see all these major challenges here, the United States and the governments deploying capital throughout those international funds. What I really think is that the capital needs to be deployed at the Brazilian funds, of course in Brazil, or other places funds, but in local funds who actually to have the ability to deploy this capital in this very complex environment in the right way. So I think that's an ability not only for Prisma, for the rest of the guys who are actually working in Brazil as a local team.
Interesting. Alan, I wouldn't question Itaú's foot on the ground, being one of the largest banks in Brazil, of course, but I would challenge you on how aggressive you are to grow this mining franchise. Already being in PDAC is a first, and thank you for being here, but would you drive the market forward? How do you think Itaú can play a role in Brazil in the upcoming months and years?
Okay, good. Rafael in their presentation make a comparison with the agro. That I appreciate this comparison, because to positioning the mining sector in Itaú, I would like to compare a little bit what was the agro some years ago. So in the past, when they launched the franchise of the agro in Itaú, one of the things it was the boots on the ground. So when a banker started on this position in Itaú, they received a small truck, a Starlink, and we say, go. So to have the boots on the ground is very important. So the agro nowadays in Itaú, just to mention, is one of the largest sectors that we have on the big terms of assets. So it surpassed the power sector, that it used to be the traditional sector for a bank like Itaú. And the mining is underweighted in terms of compared to when you take the GDP in Brazil in the portfolio that we have, and I will risk to say in the banks as a whole in Brazil. But this is a different animal. We need to have the technical knowledge, the geologists, engineering, etc. Step by step, we will get there. But we do believe we have the successful franchise of the agro in Itaú and also in the power, that mining have a path similar to that with their idiosyncrasies, with their specificities, but we understand that we need these, for sure, boots on the ground, the knowledge, and for sure, 5 years from now, it will be a completely different franchise for mining. So we have this playbook that it was successful in other sectors, and we believe this continually and very consistently we will get there. Right now, we are on the, let's say, on the beginning of this, starting a lot of partnerships that we believe this is the best way to reduce these asymmetries of information, reduce the asymmetries of what happens exactly on the mining, on the geology, so bring capitals, different type of capitals, different type of institutions. So we appreciate that, but for sure, for 5 years from now, will be a completely different story. This is the beginning of this journey, and we're happy to be part of that. Thank you.
Thank you, Alan. And we'll conclude with you, Rafael. You touched base on this in your presentation initially, but what are the main roadblocks? What needs to be improved to move the market forward, and how do you see the opportunity as in the next years to come?
I think some of the roadblocks we are trying to remove, and the first of those is really bringing the capital market to the place. Many options, not only banks, funds, BNDES and others. We've seen also investment from abroad like DFCs and things like that. So the financial piece is very important. The other roadblock is really regulation, which for sure is improving, but Brazil has to do its own sometimes homework in some of these aspects. Another barrier or roadblock that I think that is becoming much more important these days is really the geopolitics. And Brazil now is in a very sweet spot in terms of being partners of Canada, of US and China and others. So I think that's something that's very complicated. And especially for us miners, dealing with that is even harder. But we've seen now how it's important to be a neutral place, right? Because we can have investors from Canada, from Australia, from everywhere. And if you look like the recent past in Brazil, there was a lot of Chinese investment, US investment, everyone. So this is very important. So if you take all of those three, I think the technical part of it, Brazil already has. So engineering is very good, geologists, the technical team is good, suppliers, vendors, the supply chain is very stable and very strong. But if we put together all those three macro parts, which are more complicated, more complex, I think we're going to be very successful in the upcoming years.
Thank you, Rafael. Obviously, markets are competing for capital, and Brazil is, in the investor's mind, is still, a miner-friendly jurisdiction. Argentina is also more on top of mind for investors this year. Recently, Chile, with the new administration during PDAC, there's going to be many discussions from other countries, but it's good to have such a strong Brazilian delegation to sell Brazil, and you have the Brazil Day also that you will be promoting some projects. So thanks for joining this discussion. I think we can give 2 minutes back to the organizers. I'm sure they will appreciate in order to move on to the next panel. Thanks everyone for watching.
Thank you. Thank you.
All right, hello everyone. I'm going to actually just ask my panel to come join me at the front of the room, please. All right, so while the panelists are joining us at the front of the room, I'll make a couple just quick comments here. At Toronto Stock Exchange, TSX Venture Exchange, we've invested a lot in our partnership with Brazil. The results we see from our companies on the ground in Brazil, some of them on this panel, others in this room, tremendous impact that we're seeing, and we very much look at the relationship between Canada and Brazil as a long-term partnership, which we've been investing in for years on the ground. So make a couple comments and then we'll introduce all of our panelists. So as Guillaume mentioned, we launched our Venture 50 program the week before last, and mining was the dominant theme on that list. And the narrative that we've been talking about to the market, just around bringing global investors to the sector, is one is around structural scarcity. So we heard from S&P, we have structural scarcity in a number of key commodities. The second part of this is we know that about 70% of all the mines that have been brought online in the last 50 years were discovered by junior issuers. So there's a tremendously important role for our TSX Venture Exchange to play in the mining sector, and it's attracting a lot of investors to the category. And we're excited for PDAC this year because I think it'll be a PDAC like we've never seen before with the momentum around the mining sector. So with that, it's my honor to introduce my panel here. And what we're going to do is start off with 3 minutes for each of the panelists to introduce their company and a little bit of an idea of what to expect in 2026. So we're going to ask Mark to start us off. So please, Mark, go ahead.
Okay. Hello, everyone. Mark Travers, the CEO of Brazilian Nickel. Pleasure to be here. Maybe I'll introduce our company today, maybe a little bit of a different profile from the companies of my fellow panelists here in terms of the commodities we have, the challenges we have, and the stage of advancement. So we are a privately owned nickel company. We have a project called Piauí Nickel Project in Piauí State in northeastern Brazil. Our major shareholder is a company called TechMet, and TechMet is an investor in critical minerals energy transition companies, and we are one of the key assets in that portfolio. We're kind of on the precipice of in 2026 of a go-ahead decision for our Piauí Nickel Project. And Piauí, I think, is unique in the sense that the type of processing we're bringing to nickel is new. While it has been tested, it's a heap leach process, while it has been used, not on the commercial scale that we intend to use. And maybe just to focus in on that a little bit and what our value proposition is, we believe that it is a great answer to the type of ore bodies that we're about to undertake and to develop, in the sense that while it's strong in terms of, or good in terms of CapEx, it's very robust in terms of operating costs, really great operating costs. It's a simple process. Now we have to demonstrate that to people investing in us because it's relatively new. And it has great ESG credentials. In terms of our product, we produce a product called MHP, which is a product that is a great access to a couple of different streams in the nickel market. One being the EV battery supply chain, and the other high purity nickel. So nickel that can be used in industrial applications, aerospace, defense, et cetera. So we think we have a product that is an excellent opportunity to de-risk supply chains outside of Indonesian nickel, which we feel, and the people we're talking to about investing really feel that we need to find alternative sources to de-risk the supply chain. So that's a little bit about us. And we are a new player, so our challenge is to prove the concept, and we've done a tremendous amount of work, and we're essentially construction ready. We have permits. We've tested our process. We've had a large-scale demonstration plant where we produced product, sold that product, had it qualified. It's in electric vehicle batteries right now. And 2026, what we need to do is match the funding with the development goal. And so that's our big objective of this year. It's a project finance. It's a large one. It's over $1.4 billion. And we'll tell you a little bit about that later on. But we think it is our year in the window. One of the panelists from the prior panel was talking about how the window seems to be there. This is our year to grab that window. Thank you.
Great. So on Mark's left, your right, Louis Pierre from G Mining, and just took a look at the stock about a year ago. So started the year at around $15 and now trading around 51. So been a great year for G Mining. I'll ask you to talk a little bit about the company and what to expect in 2026.
Yeah, thanks. So basically, I mean, we started G Mining Ventures with the Tocantins asset in Pará State. We built that project on time and on budget for $460 million. Last year was essentially achieving 1 year of commercial production and having a full year of commercial production with 172,000 ounces at an all-in sustaining cost of just below $1,200 an ounce. So obviously generated substantial free cash flow with that margin, 193 million, 191 million for the first 3 quarters. So that's been our foundational asset. We're currently building the Oko West project in Guyana. It's about $1 billion project that'll be producing 350,000 ounces, essentially catapulting us to 500,000 ounces once in commercial production. In combination, we did acquire a third asset at the end of 2024 called Gurupi, also located in Brazil. So that's what we consider an advanced stage exploration asset, but already with a substantial resource. And we'll be looking to advance that project to hopefully make it construction ready come 2028 once we're generating over $1 billion of free cash flow and won't know what to do with it. So yeah, we've delivered and had the tailwind of the gold price rising over that period. So it's been an exciting ride so far.
Great. And next on the panel, I think he and I are the regulars on this panel every year. So again, took a look at the stock price earlier in the year, around this time last year, $17, now up to, when I last looked, 46 for Euro Copper. And this idea of this structural shortage in copper is a huge investment theme. But Mako, please introduce yourself.
Em primeiro lugar, obrigado a todos pela essa oportunidade para falar com vocês e nossa empresa. It's easier for me to speak in English, but it's a concerted effort, 10 years in the making here. Yeah, first of all, to be on the stage, thank you, BCCC. I've been here, I think, 10th panel, and this feels like a bit of a homecoming for me. Obviously, a very exciting time for our sector and for Arrow as well. For those of you that don't know, Arrow has been a public company now since 2017. We have 3 operating assets, all in Brazil, producing copper and gold. And the history of Arrow is one that has been built by partnerships. So Royal Gold, some early financing partners, and most recently Vale Base Metals. Last week, we announced the preliminary economic analysis on a new project, which is a partnership with Vale Base Metals that we will be advancing this year. In parallel, this is a year for us, having navigated project builds and major capital expansions, over $1.2 billion that we've raised via various capital market transactions. So to be in a position now to advance the Furnas project and also take advantage of the elevated metal price environment that we're in, it's an incredible opportunity for us and for our shareholders. I'd also note that probably, I know there's the market cap and the share price, but if there's any measure of success, I think it's finally being a platinum sponsor at this event. I think is the true mark of success. So very happy to be here. Thank you.
Great. And last but not least, maybe no company better captures the ability for Canada and Brazil to collaborate across borders than Vale Base Metals. So please.
Muito obrigado por estar aqui hoje. Boa tarde a todos. So firstly, thank you BCCC for inviting us here again. And yeah, I mean, 2025 was an incredible year for us in VBM. But just to start, I mean, who are VBM? We are basically, since we carved out from Vale SA, we are pure play polymetallic nickel and copper business, with having Vale as our major shareholder together with Monaro, right? So we've been through this journey since 2022, and 2025 was quite incredible year for us. We entered in a huge transformation in the business. We basically took 40% off our overheads. We really focus on become more agile, lean, and focus, and really driving autonomy and accountability to our business units. So, and the results of all of this, together with the review of our project portfolio, and really focus on improving our exploration targets, mainly in Brazil. We basically tripled the number of exploration rigs that we had in Brazil in 2024, then 2025, and we keep moving in that way. So it really came together last year, and we basically, my message is, we are moving from a transformation business to a repeatable performer right now. So and that's the main focus. So growing copper in Brazil as fast as possible. This is our major goal. As you saw in the market, we are guiding. Our guidance is to achieve 700,000 tons of copper by 2035, basically doubling the amount of copper that we are seeing today from our operations, with the ambition to go beyond that. And nickel is basically driving very hard on our sustainable, bring the business to the lowest half of the cost curve of the industry to become globally competitive. And that's what we are basically focusing right now. So a few of the results that we saw out of this last year was basically, you saw, I mean, we basically doubled our EBITDA from 2024. What that means is we improved around $2 billion from 2024 to 2025 last year. And we are seeing our nickel business as well going to the right direction. We basically became break-even last year, and that's what's our focus for 2026, is we're going to advance faster with our Bacaba project. It's the first project that we got licensed recently, right now in January. So we expect our first production from Bacaba to start early in 2028, and drive our cost as down as possible to be competitive with our global market in nickel. So that's basically what we're focused on.
Great. So my colleague, Dean McPherson, who's our global head of mining, he now refers to the mining sector as the critical mining sector, because all mining is critical. So we're going to get into some topics. Really want to focus on Brazil, but of course what each of these companies is doing. And it seems important to start a little bit with financing and thinking about financing projects in Brazil, and companies, you know, on this stage will have views about Brazil relative to financing in other markets. But we really did see liquidity picking up around the mining sector around the middle of last year. We saw the financing start to boom a little more in the fall. We still haven't seen the new listings and IPOs really hit the market, but we have seen the financings pick up. So, Mark, I want to start with you on the financing side, because what we're seeing is a return of retail investors, and you know, I think at PDAC we'll really see that. We're seeing the return of generalist investors on the institutional side, but also these sovereign wealth funds and government-driven initiatives coming to the sector. So, Mark, I'm going to start with you, because I know you have a substantial investment on that side, but I'd like each of the panelists to share a little bit of their thinking about what they're seeing, what you hear from investors in relation to Brazil. So, Mark.
Sure. Look, I'll address the Brazil piece directly, because that's where our project is, but also try and talk a little bit about overall funding challenges for critical minerals, and particular nickel projects over the past couple of years. So I think if we go back a few years and we were looking at financing our project through project finance, there was an exuberance in the market at the time where, let's say, car companies felt that they had to own mining companies. And that was something that we saw, and participated in, but that quickly dissipated back at the beginning of 2024. And so we've really had to pivot to a different model of funding, which recognizes, I think, some structural challenges in funding certain types of commodities and certain types of projects. We're a greenfield nickel project being built outside of Indonesia, where everyone feels there's enough nickel being produced in Indonesia very well. And so what we've had to do is connect the dots in finding structural ways to address the gap in finding the funding. And so I think, as you suggested, what we found is it was very difficult to get on side a lot of private money, because we need both debt and equity. We had some, but really we saw sovereigns come in and see the policy need, and some seeing obviously the economic opportunity in the long run, but clearly from a policy perspective, parties saw that there was this need for critical minerals projects to be built in the future to meet both potential shortage, but also a risk to supply. If you have all of your supply and processing going through one route, how do you feel in Europe and the US, et cetera, about your industry being exposed? So we did see that come in very strong through the beginning of last year, maybe even a little bit before that. And that has carried us through. And as you mentioned, we have some strong interest from the Development Finance Corporation in the US, which has announced $550 million in support. We have Export Development Canada supporting the investment in Piauí Nickel Project for up to $275 million. And then we also are talking to a number of critical minerals equity funds, parties that think we have to address some of the risk profile that the earlier panel was talking about. How do the traditional investors who don't want to invest with that profile, how do we bridge that? So there's, in Brazil, you have the BNDES Vale Ore Investments Fund, which is out there, and BNDES is very active as well. And then there are a number of players in places like Europe, et cetera. Now, including places like Germany and France. Now, the good news is we are seeing other investors come back into the market. We saw the traders really come back and look at this back in around October, November, seeing real critical risk around nickel, in particular MHP, relying too much on Indonesia. So we're starting to see that come back. And we're starting to see private equity and others really start to come back and show tremendous interest.
Great. So, we have a number of prominent people from the mining sector here. They're at the BMO conference interacting with investors. So would love each of you to share some thoughts on what you're seeing from investors right now. What's the reaction specifically to Brazil, and share what's actually happening.
Yeah, it's been a busy week when you combine BMO and PDAC back to back. But yeah, I would say just generally it was a very busy schedule. We are seeing a lot of generalist investors take meetings, which are basically underweight the mining space or precious metals, and feeling like they've missed